Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and this video is a weekly forex analysis and forecast for the week of 3rd until 8th of May 2020. I hope you are well and you are safe, and as you know, many countries start to open the economy slowly, and I hope everything will get back to normal as we all wish. As soon as possible. So stay safe, and my best wishes to you and yours. If you are new to this channel, so first of all, please allow me to welcome you to our community. Please subscribe to the channel below this video and the subscribe button, and remember to enable the notifications as well. I would like to take the chance and to invite you to join our free Telegram and to join my live trading rooms, where you will be exposed to live market analysis on daily basis, coming up with trading reports, which I will present later today. Both links could be found below this video in the description or in the pinned comment. I would like to remind you that inside my blog you have a new series of new ebooks available right here. Part 1, Part 2 of Japanese candlesticks, and the candlesticks for advanced. So just come to the blog, VladimirRibakov.com, right here, and inside you will see the free ebooks. You can find it here, Forex Education, free ebooks. Okay, scroll down and you will see these 3 new ebooks available for you, completely free for download. Also, for more content, I would like to remind you that there is a very comprehensive, very well built newsletter, both for advanced and beginners, available for you, again, completely free. You would find there some amazing content that will be delivered to you on a series of several emails. So just inside the blog, join my Forex newsletter, click and choose to which category you belong. Now I would like to go and to go over the weekly forecast from previous week to see what of our analyzed instruments worked, what failed, what's relevant, what's working, what has to be updated, and prepare the plan for the coming week. Please note that this video includes several instruments from my total watch list. For full watch list, I invite you to join Traders Academy Club, where you would enjoy, as I said before, daily live market analysis video delivered to you on daily basis, coming up with a full trading report, as you can see here, with all the instruments we are trading. So what you will have to do is click the image, and it will open up the image for you, explaining what was covered in the live video. Okay, so just a brief example how traders trading report looks like, and again, you get it in Traders Academy Club. To join us, just follow the link below the description or in the pinned comment in the comment section. And right now, let's see how the previous week looked like. As always, on Monday I will publish the text version for the current week, so just inside the blog you would find it on Monday. Okay, just come back to the blog and you will see this available for you on Monday, or follow up by emails or directly in the video. It will be available for you everywhere. The first ones, the euro pound we invalidated, euro CAD we invalidated. So the first one for us previous week was Australian versus the New Zealand. We marked 2 important levels here, where we are looking to see the divergence complete and looking for reversals. So Aussie Kiwi reached these zones as we wanted to see, completed a massive divergence on the moving averages. RSI kissed the 80 again on the last rally, and it completed what most likely looked like a triple cycle, where we should be exposed to corrective cycle. Corrective cycle could be in 2 waves or any sort of a range here before further trend continuation. So the way I see that, we are now heading into correction before further continuation upside. The first leg, if assuming this is ABCD, the first leg should be in trending structure, and this is pretty much what we are building up right now. Here. Okay, so I do expect later or sooner for that to finish, create retraces, and deliver us some good opportunities. Pay attention, we would want to have clear invalidation plan, and the invalidation plan would be 61.8. If inside this trending structure we will hit a rally that will take us through all the Fibonacci's, that would invalidate the bearish view. Okay, as long as it didn't happen, the idea is bearish, and I would expect to see price continue lower after corrections. If you like this idea, or if you follow up already that from the previous week analysis and during the week as the opportunities were delivered, please hit the like button. If you, in general, if you enjoy the content I provide you here in this video, please show your support back. Hit the like button. Drop some feedback below in the comment section. Your support, my motivation to keep doing that every single week for you. I also would like to remind you this video is completely free for the community. Feel free to share with anyone you want, and I hope these ideas and analysis would be beneficial to as many as possible. The next one we followed was CAD yen, and the idea was sell the rallies, and let me show that here. I showed it as example from trading report. This is what we were looking for in the academy this week. Clear pattern. So we wanted to see two steps. Step number one, to clean this high and to complete the divergence. Then step number two, we wanted to see the bearish bounce and to see that going through the trend line. Now let's see how the market reacted on this one. Let's zoom in. Exactly as we wanted to see. Two waves completed. We got a new high. Clearance zone was getting here. This high was broken. Okay, the divergence completed, and the rising trend line was broken as well. What's next with this pair? I believe the new bearish trend developing. What will we need to pay attention to? A potential opposite sign here if divergence comes in play. But meanwhile, if nothing change, the view here remains bearish, and I would expect to see some trending structure developing, and then bearish continuation after retraces. Exactly like with the AUDCAD Kiwi, I would expect to see a clear, expect to have a clear invalidation plan, and this invalidation plan would be the 61.8 Fibonacci. Okay, so we want to complete one more low, to complete the three lower highs, lower lows, trending structure, and then after retraces expect bearish continuation. The 61.8 of this trend would be the invalidation, because if we move through that in one leg, that would be invalidation to the bearish view. And why is that? In trending structures, we are good with corrective phases, and which normally happen in ABCD structure or a range. If it happens in one straight leg through all the Fibos, this is a big warning sign the market gives us. Okay, that's why I would want to do it this way. And if there will be no surprises by the market, I would expect to see the price completing the move down until this divergence would complete on a daily time frame. Let's see, time will judge how that moves. AUDCAD, we wanted to see it completing three highs, three lows, and we got it as well. So I would expect also corrections from here. And on the lower time frame, basically we have the pattern here that suggests we could see the bearish control. So we need basically one more low below this area to complete that, and then we'll expect continuation. All the O's is pretty much the same, so I'm not going to explain them all. As I said, I will cover several instruments. For full list, I invite you to join our family in Traders Academy Club. As I said, the link to join below in the description. Okay, so I'll share one more, and the rest would be waiting for you inside the academy, if you want to enjoy from, of course. So the last one I have is the EURAUD. I believe that we are here in some good cycling condition, coming very close to the rising trend line here, and also the dynamic 200 moving average bouncing from the round number 165. It's a straight move. Pay attention that we are bouncing here from a very strong supportive zone with a very powerful engulfing, as you can see, and one more verification candle. So I expect to see a corrective phase here, meaning that I want to see some sort of first leg completing here as a bearish structure, making corrections and delivering to the upside. Invalidation, as always in trending structures, would be 61.8. If we suddenly go below that in one straight leg, it's an X, big X, to move neutral on this pair. So that's from the Forex. And as I mentioned before, for full list that is going to be this week, I invite you to join our family in the academy. Now let's quickly talk about several of the other opportunities we have, and one of them is the sugar. That's the one I have for commodities. So what do we have here? Pretty strong engulfing at the end of this move down, kind of strong supportive area going through the lows, psychological level 10 that was penetrated to the downside but holding so far, and mainly the daily time frame, which represent a slowdown here in 3 waves with a bullish divergence. So I would expect some corrective cycle here. I'm not sure the bearish trend in general is over. I do think that later we should see some attempt to create lower low. Not quite sure about the long term, but on the short term, I believe we are heading here into some corrective cycle to deliver this sort of 2 waves correction. So from my point of view, I would expect to see the correction continues after retraces. I find it interesting on the sugar. There are many more instruments that currently on the list. One of them is what we follow also in the report in the academy, as I showed before, is oil, which was fantastic this week. And again, if you want to enjoy from all the instruments, then I invite you to join our family. The indices are back on the play, so I'll show one, okay, out of all of them, and the one that I find pretty interesting is the DAX. What do we have on the DAX? Well, as you know, my long-term analysis is basically showing this. Now, I definitely find the current waving interesting, as we got 3 higher highs, higher lows. Now, likely to assume we're gonna be exposed to something like that. But the current situation is pretty sexy. We're slowing down. We are on a Fibonacci, strong Fibonacci level after the first leg, as you can see, right? Spiking through the 50 and holding so far. This is a very beautiful sort of dark cloud candle pattern. I like it. It's taking us towards the 11,000 and bouncing to the downside. 4-hour chart has a clear divergence for us, which make me think that if this trend line is broken, we are heading towards corrective phase. And the way I want is to break above this trend below this trend line and see the DAX completing 3 lower highs, 3 lower lows. Okay, if we see that done, I would expect to see bearish continuation after it traces. Invalidation plan in that case would be 61.8. Okay, very important. Now, what do we do if we do not get the third low? 3 lower highs, 3 lower lows? Simply remove it from the list. We must confirm that we are creating a bearish pattern and we are going below this trend line. So like this. Okay, and I would expect to see corrective cycle. American indices also very, very interesting, and I will be back in play, and I will cover them, of course, in my live market analysis in Traders Academy Club. That's from the Forex, commodities, and index. Okay, we have very beautiful instruments. There are many, many more, but I cannot cover all of them, of course, in this video, as you understand. And one more interesting opportunity I find is from stocks, which also I want to include. Deutsche Bank. I love this also for long term, but it's different story. On the shorter term, I love the hold of this divergence, and I love the hold of the psychological level 5. It went below, but retraced immediately. I love this candle pattern, the piercing and the verification candle afterwards. I love the fact that daily already has 2 higher highs, higher lows. It's missing one more high, of course, to start a bullish trend. That's why this trend line is the invalidation for the bullish view, and I would expect to see here continuation. On the lower time frame, we are waving clearer. This was the first one, the first leg, then correction, and I believe we are heading now into some new sort of trading structure. So from my point of view, buy retraces here is a very interesting opportunity. Of course, if we will get bullish evidences, and as I mentioned before, the invalidation is this trend line. Why? Because if we break through that, it makes it just ABCD correction before a possible trend continuation lower. Okay, it will invalidate until this trend line is holding, and based on the waving we currently build, I would expect to see here continuation higher. So Deutsche Bank, from my point of view, is very, very interesting. And the last opportunity would be in cryptos, and that would be the LITECOIN, where we are facing a very interesting supportive zone with a bullish divergence, and a classical hold here, as you can see, psychological 25. Daily time frame creates higher highs, higher lows, which make me think after it traces we are going higher again. The best would be here is to get corrective phase in 2 waves or any sort of a range, and see that delivering the opportunity to ride to the upside. Invalidation 61.8 of the rally. Why? Because if we suddenly go below in one straight leg, game over. It's removed. Why? As explained before, in trending structures, we are good with corrective phases, which is ABCD or range. We are not good with one straight leg through 61.8. So this is the watch list I wanted to share with you for the coming week. I hope you find it interesting. And as I said before, I invite you to join our family in Traders Academy Club. Enjoy live market analysis with all the instruments day after day. Enjoy our 24/5 trading chat in the Traders Academy Club in our Telegram, dedicated Telegram, and enjoy all the knowledge I have to share with you. I hope to see you with us, and meanwhile I would like to take this chance and to thank you for your time watching this video. I hope you find the instruments interesting. and the opportunity is interesting as well. I hope you find my analysis helpful and understandable. As you know, my techniques are based on cycles, divergences, and convergences combination from the specific levels, and multi-time frame analysis in terms of trending synchronization, and that's how I choose my instrument. So that's pretty much it. Stay safe, be well, and my best wishes to you and yours. And I'll see you in those of you who are in Traders Academy Club. I'll see you in our daily videos, trading reports, and of course our Telegram chats. That's all. Thank you for your time. Stay safe. Yours, Vladimir Ribakov.